the comeback of big oil. And specifically, we are zeroing in on Chevron, ticker CVX. It just sent a signal to the market that was, well, so loud you just couldn't ignore it. This thing isn't just bouncing. It's like the market is screaming, oil is BX.
It really is.
So our mission today is pretty clear. We're going to distill the financial analysis around this huge move from Chevron. We need to figure out if this is, a real sustainable shift, not just for CVX, but for the entire energy sector.
And if you just look at the charts that day, the signal was impossible to miss. We're not talking about some small, timid move up.
No.
CVX surged a massive 2.6% in one single day. Yeah. It closed at $159.25. When a giant company like that moves with that much conviction, it tells you something. It says the big money, the institutional consensus, has suddenly shifted gears.
Which brings us right to the main question for you listening. Is this just a temporary blip, maybe some short covering? Or are we actually seeing the start of a real sustained run that could push big oil back to its old highs? Or maybe even higher. We have to look at the chart, but also what's happening inside the company itself.
Exactly, the psychology and the reality.
Let's start with the chart then, the technicals. That's where the market's vote is cast, right? So what was that specific price ceiling that Chevron had to absolutely smash through?
The number everyone was watching was $155. $155.
Okay.
And if you look back at the charts for the last few months, 155 wasn't just some random number. It was like a fortress.
A psychological barrier.
Absolutely. For weeks, anytime the stock tried to rally towards it, it got smacked right back down. Buyers would try to push, but sellers, they saw that level and just flooded the market. It was a clear line in the sand.
And what's interesting here, as the analysis points out, is that it didn't just sort of sneak past that line.
No, not at all. There was no hesitation. The conviction was there from the opening bell. CVX opened at 155.50, so already above that critical point.
Right.
And it just climbed all day long, systematically. It closed near the very top of its range at 159.25.
And that close is so important, isn't it?
It's critical because it tells you that the people who bought in the morning weren't cashing out. They held on, expecting it to go even higher the next day.
Okay, but what about the volume? Because a price move without volume can be a trap. What did the volume tell us about who was doing the buying?
The volume confirms it. It was high. And high volume tells you that the big players, the institutions, were participating. Pension funds, hedge funds, they need that high volume to build their positions.
Right, they can't just sneak in.
Exactly. When they step up and buy aggressively above a key resistance like that, it's like they're validating the move for the whole market. It says, we think the downside is limited and we're putting serious capital to work here.
And the buying didn't even stop when the market closed.
No, which is a really fascinating detail. The analysis shows that the stock actually pushed up another 0.36% in after-hours trading.
Wow.
That's a statement. It means fund managers were scrambling to get more exposure even after the bell. That tells you how urgent they felt it was.
So let's just synthesize this for everyone listening. The big technical signal here is this idea of polarity reversal, right?
Yes, it's a foundational concept. That old resistance, that ceiling at 155 that held the stock down for months.
Yeah.
It's now officially the new support level. It's the new floor.
A classic dip and rip setup.
That's exactly what the technicals are screaming. The dip phase below 155 is over. The rip phase, where that old ceiling now catches any future dips, has just begun.
So the thesis now, just based on the charts, is that if CVX pulls back to 155, that's not a panic signal anymore. It's a buying opportunity.
Yeah, a confirmed buying opportunity. This is a total shift in market psychology.
Money is flowing in. But, charts can sometimes be misleading. We have to ask why. Here's where it gets really interesting. We have to look past the charts to the actual operational reality. What's going on at Chevron that justifies this?
And this is where the story gets really, really strong. The fundamentals completely back up the chart action. Chevron is basically operating as a finely tuned production machine right now. The analysis points to a record output.
How much?
4.1 million barrels of oil per day.
4.1 million. Just to put that number in context for a second, that's like the entire daily output of a country like Iraq.
It's monumental. It really is. And crucially, it's where that production is coming from. The analysis highlights the Permian Basin in the U.S.
Right.
It's firing on all cylinders.
Yeah.
And the key here isn't just volume, it's low-cost volume. The Permian is one of the most efficient and, geopolitically safe places to drill in the world.
So their margins are better.
Much better. It means even if oil prices dip a bit, Chevron can stay highly profitable in a way that some of its competitors can't. The Permian is their engine.
And all that volume, all that efficiency, that has to show up on the balance sheet. What do the profits look like?
They're cash flow king. That's the term the analysis used. And for good reason. They posted a quarterly profit of 3.6 billion.
$3.6 billion.
And that's even with all the price volatility we've seen. That number just shows how stable their operations are. They just generate immense amounts of cash.
And when you have that much cash coming in, I mean, that gives you so much flexibility. You can invest, you can manage the energy transition pressures, and you can pay shareholders.
You can absolutely pay shareholders. And that financial strength is what secures what the analysis calls the dividend safety net.
Which is a huge draw for a certain type of investor.
A massive draw. CVX pays and I'm quoting here, a juicy 4.3% dividend yield. And it's described as safe and consistent. So for someone looking for steady income, this is critical. It provides this fantastic buffer on the downside.
Right.
It means you can buy the stock today, collect a very secure 4.3% income stream, and just wait for the price to appreciate. It totally changes the risk calculation.
So you're literally getting paid, and paid well, just to be patient while the market catches up to the fundamentals. That's a structure that conservative money just loves.
Exactly.
Okay, so we've got a strong technical breakout at 155, and we've got rock-solid fundamentals, record production, billions in profit. So the big question, what does this all mean for the immediate future? Where do things go from here?
Well, this is when we turn to the Wall Street consensus. What are the analysts, the people who model this for a living, expecting? The average price target right now sits at $175.
175. Okay, so that represents, what, about a 10% upside from here?
Roughly, yes.
Yeah.
And that's not including the dividend.
I have to ask, if everything is so strong, the breakout, the production, why only 10%? Why isn't the target higher? What are they worried about?
That's a very fair question. Analysts tend to be cautious. And that 10% target is likely factoring in the next major hurdle the stock has to clear.
And what's that?
It's the previous 52-week high. That level is right around $168.
Ah, okay. The dreaded overhead supply.
That's the one. Think about all the people who bought near the peak last year. They've been waiting underwater just to get back to even.
So they become natural sellers at that point. Creates friction.
Exactly. It's like a speed bump. So 168 is the next real battleground. We have to see if the current buying momentum is strong enough to absorb all of those sellers.
But if it does?
If it does, if CVX can decisively clear 168, then the analysis suggests the path forward gets a lot easier.
So that's the blue skies ahead scenario.
Well, let's be a bit more specific than that. It's not just blue skies. It's that the charts show very little historical price friction. There just aren't many sellers left between 168 and the 175 target. So the stock could accelerate very quickly through that zone. 168 is the doorway to the next leg up.
This has been a really insightful deep dive. Let's try to summarize the verdict from the analysis report. Based on everything we've discussed, the huge technical breakout turning 155 from a ceiling into a floor, and pairing that with these rock-solid fundamentals, $3.6 billion in profit, record production, Chevron is looking like a strong buyout.
It is, but we do have to add that one condition.
Right.
This whole forecast, this upward move, it does depend on the broader oil price environment staying stable. Chevron is efficient, yes, but it still needs a healthy demand picture for oil globally to keep climbing towards that 175 target.
Of course. And as always, remember, this deep dive isn't just about one company. So what does this all mean for you? We're looking at CVX as a proxy, maybe the strongest proxy for the whole big oil sector.
Right.
If the leader of the pack is smashing through resistance with this much power, it really implies the whole sector could be undergoing a fundamental shift in market sentiment.
It's a signal that the market is, perhaps, re-embracing the idea that traditional energy is going to be viable and profitable for a long time to come. You've got the two main forces, right? A confirmed chart breakout and the fundamental engine of 4.1 million barrels a day. That conviction is being priced into Chevron right now.
Right.
So the provocative thought to leave you with is this. If the smartest money on Wall Street is suddenly valuing big oil, and specifically Chevron, with this kind of urgency, clearing major technical levels driven by record output, what does that tell you about the future global demand outlook that they are now pricing in for the entire energy sector? That's the real long-term question here.